G'day traders, Sam here from TradeToProspa to give you another crypto update. Now let's have a look at a few charts. First of all, let's start with the SP 500. Let's have a look. Okay, so the SP 500 is currently at support, as you can see, and it's a key level with the 200 and the 233 weekly moving average. Historically, that is an area that is a good opportunity to find the support. And if you look on this particular chart, here we had a support, a rally, and therefore you can say that's a double bottom. So we expect a bounce. However, based on the climate and so on, with the financial markets in terms of inflation and interest rates, we do not see anything coming soon from the Fed or pivot, and therefore we expect continuation with rising inflation, and interest rates aren't going to make any difference. Historically, this is seen from many perspectives, but this is a bubble, and I believe when we look at the SP 500, since the housing crisis back in 2007-8, we've been on quantitative easing, and that basically means money printing, and that's what we got this bubble or this chart with high increase. So it's come to a point where inflation over the COVID period, which is here as well, over here was record numbers of printing for the Fed and globally as well, and that's why we've got all this crisis with monetary and another what I call parabolic printing, and therefore it can't be sustained, or it can't be sustained when inflation comes in. No surprise, it's got nothing to do with anything else besides putting money out there with no work, just printing money out of thin air. And so now they're looking at managing all this. Everything else you hear is all lies, and it's pretty much to remain in government or to remain in power and blame others. But they never talk about the real issue, which is printing money. So looking at this chart, and we'll look at Dow Jones as well, my expectations was that either we find the support here, right there as it is, or we come below it, somewhere around here, maybe with this bottom of this channel, and then bounce. What I do think is it is risky either way. What I expect is in some maybe opportunity where it comes below the 200 just slightly, and they pick up liquidity, and then up it goes. And I don't expect it to go much higher than that. And I can explain from that perspective. So this is our weekly chart. Let's go to the daily. We just apply basic rules, and that is looking for previous support and resistance. And you can see this. Hold on for a sec. Let's get rid of that for a sec. And maybe that too. Okay. So you can see from alley wave count, I have my 1, 2, this could be a 3, 4, and then 5 further down. We can also see it's a bit of a channel as well. So for the bounce, we can use Fibonacci from there to there, and we look at the golden ratio level as a strong resistance level, and you can see how it's got confluence in that area. It's in the middle, and it's point of control, and you might say, okay, it could be down here as well to the 0.5. The 0.5 would be, in my perspective, a main resistance. I don't think you'll get to the golden ratio. Never to say, where it's at the end of September. September usually is a weak it's a bad bearish market time of year or month, and October is probably as well. So I don't expect much of a bounce. If I do see a bounce from here, it's probably there. But as I said, there is the risk. If you buy from here, they might just push it down a bit further, just like that, and then push it back up. Just the way that things move out. We can see on many charts, it's always a case where sometimes it just dips and then rallies. So I'm looking for this. And there's not much of a strong follow through at the moment, as you can see. If you look at that, that was a good bit of a few days in a row of bounce. Here we're already struggling. We've pulled back on that gain, and now we're back to neutral. But anyway, that is my perspective. I do expect in the long term to come down here, and that will be complete our wave 5. Then we have this ABC correction, which is pretty much the 3 sigma move. So I do see this happening. I did explain in the past the 21 monthly moving average. So if I can get this out, and I'll just smooth this across for those that haven't seen it before. The 21 monthly moving average is this black one. And you can see from this chart, the 200 daily moving averages played their role. The 21 month also played its role. And historically, when we've seen from a monthly perspective, I would put on a weekly for now. Anytime we lose this 21 moving average, we go down further. We get a rejection, we'll go down further. And if this goes back enough, it does, we can see from these ones, to number of points that I've put on other videos, these cross over. With the 21 monthly moving average, we have downward momentum. So you can see how once we lost the 21 monthly moving average, we had 2 attempts here, and then we went down. But this is a nice bear market, a pullback, and the lessons I learned from this one is if you refer to the previous level here as a reference, you can see the 1.2272. So it hits a clean Fibonacci level, and you can see that 618 is also acting as a pivotal area as well. So once you lose that, you actually fall much further. So that's the bottom on that scenario. And what we can see from this exercise is that once the 200 daily moving averages cross over the monthly 21 moving average, then becomes uptrend. Similarly, we'll look at the next one over here. We have the same. And just let me clean this chart up a bit. So that was 2000. That was in 2000. The Y2K technical issues globally, and from another perspective, we have this as again. So we've got the 21 moving average here, and we lose it. We retest the 200 moving averages as well as the 21, and we get a knockback, and then we follow through all the way down. Similarly, we see these crossing over and then crossing the 21 monthly, and we start to get this uptrend. So I'm expecting something similar. So when we look at these charts, we see that, yes, we have crossed over the 21 monthly moving average. We've also experienced a rejection on the 200 daily moving average rejection, and you can see from this that we're not going to get it's very doubtful that it's going to go back up again to that height. So I would just use Fibonacci from that perspective, the golden ratio, and I think the 0.5 would probably suit us more based on that resistance level and this level as well. It could probably go to that level, but I would definitely look at this trend line as well as a resistance. And so this is definitely going to be a strong resistance layer if once it comes up to this level. Got the trend line, and you got the Fibonacci as well. So looking from the SP 500, we are dropping. This area is problematic at the moment. As I said, it could probably just come down and then go up. I do expect a bounce, but exact entry is going to be difficult. Okay, you can see that area could be giving justification for a bounce as well. So leaving it at that, let's move on to the next chart, and that's the Dow Jones. Dow Jones is very similar. However, on the 4-hour, let's see at the 4-hour, it's dropped. So on compared to SP 500, the Dow Jones already dropped to 200 and 233 weekly moving average already. So it's below it, and the RSI is complementing the chart. So if we were to see a breakout from this daily, then I would expect this to go up to this level of some sort. And then similar to the explanation on the SP 500, we see this further continuation to the downside. And might get to the 50% or to that level, but I do expect a continuation of the downside. This could just continue doing that. So once we're in the bear market, we just see this continually, and there's no reason why I can't do that. We'll look at Dow Jones History, and we apply. So it's all a bubble, all printing at the time. Usually you have 7% gains in a year, and you can see here from year on, and we just got a lot of gains, which is not organic really. But you can see with these charts where it goes red with the moving averages, and we got the same as well. On the moving average on the 200 moving daily averages, we got the red from green to red, and so it's pretty much the same thinking along the SP 500. Volatility here is dropping, and usually when volatility drops, I would say that this level seems to be an area where we start seeing movement. So this volatility could drop further down, and in this case, you can see how far it went down. The RSI has a bit of bullish divergence at this point, but it always fall through. So that's our support level. Once we drop that level, which is probably where we can become really bearish. So let's look at it. What have we got here? Okay. The MACD is definitely bearish. SP 500. Let's see what's RSI doing here. Okay, so not much there. That is on the weekly. The RSI is pretty much hit a level similar to the others, where this is becoming resistance. So I will look at that as a continue on. So if RSI was to come up to that level, I would see as a rejection. All right, that's pretty much it for there. Now I'm going to move on to Bitcoin. Let's get onto this chart here. Right. So we've got two settings. Actually, I didn't cover the Dixie, did I? Give us a sec. Right, that's the Dixie. The US dollar index, which uses the euro as the majority of its ratio, and as the euro drops or gains, it has a big impact on this chart. So what we have is an ascending channel. And from a big picture perspective, I'll get to that at the moment. We had this channel, and you can see me. Maybe that was when I changed the log settings. We are at this top level of the channel, and you can see that there's a lot of confluence as resistance, and we found our resistance there. And I did say that we might consolidate or pull back further to this level and then continue up. So at the moment, it's a channel. So let's zoom in, but understand in the context of the big picture why we have resistance here. So if I go to the daily, you can see how I'll call this out at the time. So it worked out fine. That's why I've got these two levels. If we can get rid of that, you can see how things work from a log perspective. And what I have is that rejection, and we've got 2 days of rejection. And we're coming to a support level, either this middle of the channel, and we're turning green, or this level here to find maybe a bounce. Otherwise, if we lose it, I do see this level being a strong support level and a continuation to the upside, because nothing else has changed. That has given us, or in the short term, Bitcoin rally holding up, and SP 500 as well. So selling and running to the dollar has slowed down, and it might just continue to go sideways. My expectations is that we consolidate and do some formation. There's two variations here. What I can say is, well, actually, I'll pick another one here, where we've got our rejection, and that line I still see as a rejection. So we might just have, if we have a bounce, we'll have another consolidation and then a breakout to the upside in the form of a ascending triangle, or we come down here and then go and continue on like that. So that is some sort of consolidation under resistance. And obviously, if we break this trend line, then we're going to come down. But I don't see that happening anytime soon. So that's where we're at with the DXY. So now we're going back to Bitcoin, and I want to share my thoughts from the macro at the moment, and then come back down to the small time frame. So what we have from Bitcoin, we look at this big chart. Let me see if I can get rid of certain aspects of it. You can see that ascending channel, and parts of that channel, if you look from there, you can see maybe that explains that level here where we reached our top. But this channel was playing a role for some time, for many years. Now I think it's changed, especially with this. So you can see, based on this strong blue bottom part, strong support line, minus that COVID event or black swan, we can see how that trend line acted as a resistance on the bottom. So what I believe from this perspective, we have another. So let's get a removal of this. Okay. And I can get rid of that for a sec. So I think we have this channel, and you can probably argue that's debatable, but I think this is, I'm using the top as a reference, give or take. Maybe I should just, yep. And I try to align it as much as I can with the middle to make sense. And give or take, I think it's, you can see how if this is the channel, the bottom of the channel is going to be a strong support area, which is about 13 to 15K, which also aligns with this previous top. So that's one level, our level of interest, that we might just find a dip and probably finish our wave 5 count. However, if I'm wrong, then we can go further down to the 8-9K range, and that is based on this Fibonacci 618 from the top to the bottom. The 618 doesn't make sense here as well from this perspective. So that does make sense. But this bottom of if this channel is correct, then this area is going to make sense as a reversal, and we need to watch the other markets at the time to see what it's doing. But that's my philosophy at the moment, hypothesis. And so for now, what we're looking at, what we've done is, all right, put some trend lines in that made sense in the past and see if there was confluence later on. So this does make sense. We have this trend line point there, point of references, and if this was a drop, it makes sense that this orange section is another support level, and it should be a good entry anyway. Is it the bottom? Time will tell. At the moment, I think in this climate of quantitative easing printing, when is that going to kick in? It's probably when inflation comes down a bit more, and then and the stock markets are really in trouble. I think that's when the printing will come in, and that could be aligned with this level here. So it's going to be hard, but we need to keep our eye on everything at the same time. Bit of a dance going on. So looking at this structure, we might have a descending wedge, and if we count this, wave 5 could be there, or wave 5 could be there, and wave 3 and 4 could be, wave 3 and 4 could be made up here as a rally. So if we have, let's do our A, B, C type of thing. A, B, our C could be down here, and D is there, and E coming down further. So that's possible. So let's do, I didn't pick the right one. So that's A, that's B, C, D, and E could come down here, or E could be here with a double bottom. So that's going to be, this 3-year resistance range is going to be, I think, a good spot to buy. Will it come down to this level? That's the question. Now, looking at this current scenario, let's have a closer look. With the mindset that I've already spoken about, the DXY and the SP 500 and the NASDAQ, we are getting a bit of a rally. And based on this rally, if I was to look on the daily, I have this strong trend line, this one in the red, with a number of resistance levels. And if I was to add, let's just add the triple, moving averages, the 10 and 100, sorry, the 50 and 100 moving averages are going to show that we are finding strong resistance, or they might act along with this trend line. And so at the moment, we can see from this chart that we've got a number of levels with this Fibonacci, and currently we've broken back above this bottom line on the daily, and we closed above it. So we are more likely to go up. These dotted lines are on a non-log scenario, and the red line is on the log scenario. So the dash could be, or the resistance levels could be this one here, very, very similar. And I do think that we might be able to get to that level here, and then rejection based on this trend line. and this moving average and this Fibonacci. So this level here, to me, is probably where we can probably go up to before we come back down again. So I'm looking at the first target, probably 16,000, or is it 16,700? And then probably potential second target, 14,000. So I'm looking at that scenario. This doesn't look bullish, even though there is an aspect to it from an RSI perspective. Let's look at the 3-day, I think it was. So as soon as we lose that level, so if this comes up from an RSI perspective and we lose that trend line, we're going to go down further. So that was bullish divergence playing out each time. And you can see the bullish divergence playing out. Actually, I might just put the log on for a sec. We'll look at on many occasions, must be the 2-day chart. Okay, here we go. Bullish divergence, okay. Just clean these charts up for a sec. So historically, if we look at these areas, 50% on the 2-day is the key level, I think. Looking at historical charts, you get a lot of resistance at the 50% level. And in some cases, when you see a trend line, it drops, and then you know it's more bearish. Here, we should get bullish after it goes above 50%, and that's what's taken place. Here, you can see how it goes above 50% on the RSI, and then we continue on. You can see how this is a lot of bullish divergence, and even though price on the daily is really just hanging around the bottom. So it's really non-volatile, very boring, and I think that is a key signature of reversal. So you can see these are all 2-day candlesticks and very slow moving, but you can see it's just being accumulated. Very similar to here. You can see how accumulation took place, and we've got this bullish divergence taking place as well. So you want to see something like that for a bottom. The COVID incident is pretty much capitulation, just a massive dump. So you're not going to see any divergences in the short period, I mean in the 2 days, but you can look at here as well. You can see price coming down, or the RSI coming down, so that's a hidden bullish divergence, and you can see that there. And again, the candlesticks tell you a story that it's not willing to go down. So when you look at here, this was pretty bearish, or not bearish, actually bullish, because it's pointing downwards while we're having a bullish divergence taking place. So that's a good easy entry, and we call that out. Here, it looks more like this. It looks bearish, and therefore, even though we've got a bullish divergence play out once or twice, like that was a bullish divergence, that played out because it dropped a fair bit, and then we found the support level, previous support, but we are seeing weakening here. So I don't expect much in terms, and I'll change my mind once it goes above the 50%, and then I'll have a look. But that's what I expect at this point. Just some consolidation. I think we're playing something like this, tell the truth, this area here. So we might, before it really drops, so we had this line here, and before it really dropped, and you got this horizontal level, you play this area for a while, and it's known as, if I was to put this chart in there, it's the LPSY. Okay, so LPSY is taking place. Whoops. That's why it's good to know your Wyckoff charts. Once you get this up thrust and then a descent, the LPSY and the SO is what's taking place in this particular area, and this is no different. I have a chart. Give me a sec. And just bear with me, guys. So here we go. I think this is taking place. So an ascending right angle broadening formation. And this is the last stages. And if I increase this, you'll see what I mean. You can see this as head and shoulders as well. So you can say that is the left shoulder, this is the head, and the right shoulder is just completing, and it's just last stages. And for this to be invalid, I say that you need to go above the 0.5, which is about 21,200. Then it's invalidated. And I would say that's a good reason, because it breaks that trend line as well as that moving average. So we want to see a daily close above that. Otherwise, we should still remain bearish. And when we look at the DXY and other charts, they will pretty much give us confirmation. So for right now, it's difficult to find an entry to short. But if it gets to that level, I think that's where I like to short. Previous last rally before it drops. All right, I'm going to leave it at that, guys. Hopefully you like it. Please give me a like and share, and come and join our community, and we'll talk to you soon. Cheers.